Welcome to this iftar session of IBPC, hosted by the BFSI focus group, which is the Banking and Financial Services focus group. Ramadan Kareem to all of you before we begin. And we have a very interesting session lined up, which shows that at 6 in the evening, when we are having such a almost full house, it only indicates the expectations in terms of what we are going to hear today. And today we have also taken the opportunity of inviting a few non-members from the SME segment. I hope all of you enjoy this evening today, and we look forward to seeing you all become members of IBPC soon. This is also a request to other members that we have always been making in each of our forums to kindly refer at least one member per month to IBPC. We need to grow our membership base. I'm sure all of you are aware that with the size of Indian community here, there is enough scope for easily doubling the membership base in the next 1 year. Recently, we have been doing a number of events, and recently, only last week, a couple of days back, we had the Suhoor event at the Al Noor Center. I'm sure many of you who attended that meeting found it to be extremely interesting and useful, and hopefully we will try and plan out such sessions in the future as well in such locations. In terms of meetings that is scheduled, June, we have about 3 to 4 meetings that we are working on right now. There is a meeting that is finalized on 18th of June with DP World. The entire team of DP World is presenting what they're doing, not only here in the UAE, but also what they're going to do in India as well. So it's going to be a very interesting session. We have a few governmental visits that is we're in talking stage right now, plus a members networking event. The details will come. So most probably these events will start after Ramadan. I would also urge members to kindly give your feedback. I think there is an online link that is available. Please use that link and give your online feedback. It's very important for us to understand in terms of the quality of the meeting and what is your perception out of these meetings. There's also there's a QR scan also there that you can scan and give your comments as well. With these words, I now hand over the proceedings to Mr. Vikram Venkatraman, who is the head of the business of the Banking and Financial Services Focus Group.
Ramadan Kareem, and welcome to all. Thank you, Krishnan. Today we are very privileged to have ECI, Etihad Credit Insurance, which is a newly established federal entity specializing in providing credit insurance to all types of companies, SMEs, corporates, etc., to encourage exports primarily from the UAE. We have some very senior members here, and thanks to my friend Abdullah, we could set this up very quickly, even during the month of Ramadan. So I will do a brief introduction to the people to the senior executives who are making the presentation, as well as attending this forum from the ECI. And then I'll just make some quick remarks about the importance of this subject and the relevance of this subject, and hand over to Lata, who will make the presentation. So we are pleased to welcome Abdullah Al-Hosni. He's Director of Commercial and Distribution Department. He's a friend. He's not only an ex-colleague but also a friend. We work together at Mashreq. He's an ex-banker, worked in FAB, Mashreq, and National Bank of Abu Dhabi. He's done various relationship management roles, so he knows client requirements from a borrower's perspective as well. So thank you, Abdullah, for facilitating this. We have Swarna Lata, who will be making the presentation. She is Director of Commercial Underwriting, and she looks at commercial underwriting as well as structuring solutions for SMEs and for large corporates. She has over 15 years of experience in this industry. She's worked with Marsh, Emirates Insurance Brokers, and various other firms, including an 8-year tenure with Euler Hermes. So she's seen brokerage as well as the insurance companies' viewpoints as well. Lata, thank you for agreeing to make the presentation. We have also another senior director, Haitham Al-Khazale, who's Risk Management Director. He manages the risk and underwriting functions of ECI, basically responsible for putting the risk policies and the risk parameters and assessment parameters into place for the company. He has an MBA from the University of Dubai, and he's worked in COFAS and Euler Hermes as well. Last but not the least is Zishan Iqbal Muhammad. He's Director of Murabaha Solutions. Thank you, Zishan. This is the Islamic focus, the Sharia compliant focus, which may be of interest to a few of you here. He's also worked in various financial institutions, including banks, Saudi British Bank, Islamic Corporation for Insurance and Investment and Export Credit, and MCB and Amex. MCB is Muslim Commercial Bank, the largest private sector bank in Pakistan. So he's got extensive banking experience as well. These are our presenters and the executives who will be taking the questions after the session. So we've structured it. The Lata's presentation will be brief, serving as a nice introduction to the product and services. Then we intend generating a discussion, and that's why we have 4 directors here who will answer questions from the audience. So this is the broad format. We have also invited many SME owners as well as bankers, and there are numerous banking friends of mine who've taken the time out to come here. And I'd just like to mention a couple of names. One is Vikas Sharma, who's already a member of IBPC. He's a regional head of ICICI. There's Nam Sahasra, who's also CEO of Falcon. Thanks for coming, Nam. And Basu from ENBD, who's in the credit risk area. So these are some senior banking friends of mine who've taken the time out to come today. So thank you all for coming. So this is a very brief session. We have a limitation of 7 o'clock for fast-breaking time reasons. So I'd like to get started immediately. Lata, would you like to come up to stage, please?
Thank you, Mr. Vikram. Ramadan Kareem to all of you, and thank you each and everyone for being present here. Before commencing, I would like to thank specially IBPC for bringing this event here and making it happen during this Ramadan timing. It's a very, different timing that everyone is coming with full energy. Still, some of our colleagues are fasting, but still they are very excited to join this event. So we, on behalf of ECI, we thank IBPC and especially Mr. Vikram and my colleague Abdullah to arrange this event. We made, as Mr. Vikram said, very brief presentation about ECI and what are the solutions we are providing to the exporters and investors based in UAE. But we want to make it short because we want to make the session more interactive, and you are free to ask questions. There are my colleagues, senior colleagues will be here, and you can ask the questions, whichever you feel based on our products and solutions. We would like to start the presentation with a small video about what is ECI and why this establishment is formed in this UAE. So this is a very short corporate presentation about the ECI. It reflects the dreams of the UAE leaders who have a vision, and that's how the country is based on all these, the thought processes, and that's how that ECI is formed. So the agenda of today is very brief. We have ECI introduction, what are the covered risks under our solutions, what are the ECI solutions, and how we can structure the solution based on the requirement of the exporters or investors of UAE based, and then sample cases, because it will give you a brief idea that how we structured. By just simply showing the solution, it might not help you, so we have showing like 2-3 sample cases, not the big ones what we have structured so far in a span of 1 year. So that's where we will show you the samples, and then the conclusion, then the forum is open for question and answers. What is introduction? To give a brief introduction about Etihad Credit Insurance, it is the national federal entity formed by the UAE federal government, and the idea of UAE to bring this national export credit agency came in 2011, and it took several multiple discussions and degrees, and then finally in 2017 a mandate was passed, which was revised again in 2018, and the company was officially formed in 2018, came into operations in 2018. We all started, some of our colleagues, we started working in 2018. And it is basically 50% owned by UAE federal government and 50% owned by all the other Emirates, the government of other Emirates. Out of the 50% other Emirates, major stakeholders are UAE and Abu Dhabi. And Dubai and Abu Dhabi, and then comes the Ajman, Ras Al Khaimah. Sharjah is yet to join by end of this year. Sharjah will be part of our entity. And then the main idea of Etihad to form is to play a catalyst role, because there are multiple private insurers here in this market who are supporting the exporters, who are ensuring, providing solutions. But as a government, we saw that there was some gap in the coverage. There were some gaps where exporters wanted to do more exports, investors wanted to invest more, but the private insurers, because of their P&L, because of their capacity issues, they couldn't support. So that's where the entity is formed to support, play a catalyst role, filling the gaps between the private insurers and providing more support, more comfort to the exporters and the investors of UAE-based entities. So that's where the formation of ECI comes. When it comes to what is the mission or the agenda of ECI is to cover the two types of risk, which are commercial and non-commercial risk, which we will discuss in detail. What are the commercial risk, what are non-commercial risk, and the thing is to support non-oil segment, to reduce the dependency of oil and increase the non-oil segment in the country, and to make it much more, basically, whichever the manufacturers or the exporters who are into the non-oil segment, that's where we are focused to expand much more in that segment. So non-oil in the sense, the more crude and anything, we are not into that. Anything related to petrochemicals, when we say non-oil, petrochemical segment also comes into our mandate that we can cover. And we are here to support both the conventional as well as Islamic solutions. So we have both types of solutions, and that's why my colleague Jishan is also here. He is responsible for the Islamic solutions, and all the solutions are similar. Only it's the type of one is conventional, the other one is Islamic, depending upon the requirement of the establishments, because there are certain establishments who prefer to be Sharia compliant. So in that case, we are here to support them also. When it comes to ECI stakeholders, we are supported by the federal two ministries, Ministry of Economy and Ministry of Finance, and then also the Ministry of Foreign Affairs. Whenever there are missions to some strategic countries, we are part of that mission, and our clients are also part of that. We can support them to take to these missions, to export and to invest into new markets and find new buyers in the new emerging markets. Not only in the matured markets, there are certain high-risk markets, which we will cover in the other slides. That's where the Ministry of Foreign Affairs, they support us in the missions. And then to form a company, to form an insurance company, we need also support of various stakeholders. That's where we have agreements, we have reinsurance treaties with bilateral, multilateral reinsurers as well as the London Lions market. So in terms of reinsurance, we have partnered with multilateral agencies like ISAC, which is the Islamic insurance, and Daman, which is again Islamic. And then on Markel, which is the American company, well established, highly rated. So we have reinsurance treaty with Markel. And then Willis Re is appointed as our reinsurance brokers. So they provide if we have any capacity issues with our other partners, then Willis Re is there to support, which is exposed to London Lions markets, from where we get the highest capacity. So we don't have, as an ECI, we don't have the capacity issues. So if any exporter, if any investor wants to have any coverage, regardless of what the amount is, we are here to support, and that's where the ecosystem is created. And then we have, to do the insurance solutions, it always comes with a financing facility. An insurance product, standalone, may not support the 100%. There should be a financial facility provided on back of that. So that's why we have partnered with many banks here, and it is continuous process. It is not that we are limited to only the banks which are listed here, but we are continuing. We have some more banks in the pipeline where we are signing the MOU on the local. If you see FAB, Emirates Development Bank is our, other cousin entity, to be honest. It's again a federal entity, so they are also part of our partnership. ADCB, RAG Bank, Standard Chartered Bank, Natixis on a multinational level. Natixis, they are very active and they come up with very offbeat cases, very typical large transactions. That is where the Natixis comes into picture. Standard Chartered Bank, they do have experience. I'm sure some of you are from the Standard Chartered Bank. They have their own factoring policies, but still there are a lot of SME segments. Even when it comes to RAG Bank, they have a lot of SME segments where they feel that there is a lack of financing, the lack of some support from the insurance. If the insurance support is there as a risk mitigant, they can give more funding facility to the SME and they can support the growth of SME. So that's where we have partnership with all these banks, and it's a continuous process. And then we have also support from different Chamber of Commerce across all the Emirates. So when you see the Abu Dhabi Chamber of Commerce, all Sharjah, Fujairah, Ajman, we do a lot of workshops with this Chamber of Commerce. They invite us to do the workshop to educate the small SMEs, because SME segment is the segment which is, to be honest, less educated. They want to do more. They want to convert it from SME to large corporates, but because of lack of risk mitigants, because lack of, if they want to go to a new market, they are hesitant because there is no proper risk coverage. There is no proper education given to them how to go to the new markets. That's where the Chamber of Commerce, we do a lot of educational programs, not only just to update them about what are the products we have, but we educate them more that these are the products, this how you can safely trade into the new markets. That's where we have this Chamber of Commerce MOU signed areas of cooperation side, and we do a lot of workshops with them. And then we have also, it is as an ECS, we are not working like any other typical ECS across the other globe. We do have our own strategies, we have our own roadmaps, and in that we have created something very unique model where we are partnering with other ECS of other countries like UKF. UKF does almost 1 billion transactions in this UAE. And the UK-based companies who are investing in UAE, they are insured by UKF. So we have a partnership with them to exchange the information, to add more capacities to that, and also to support the UAE-based entities who wants to invest in UK. If they need any support, we have this kind of agreements with the UKF, where it's on a very high level agreement where the ministries are also involved, and we support in that. And also we have with Italian SACE, and there are some other ECAs which are under process, and they will be part of it. And then to do all this, we should also, even though we are a federal entity, but from the banking fraternity, they know very well, to onboard us, they need a rating. They need the rating of an ECI. So we are working with Fitch rating solution. By end of this month, by next month, we will have our own rating that gives the bank more leverage to open a line on us. So we are working with Fitch Solutions. Ernst & Young, any institution will not be successful if they don't have processes properly in place. So that's where we have EY supporting us in creating the processes and procedures. They have implanted in our office. We are working very closely with them how to, because we are a startup. We just started in last year and we have a lot of things to do, lot of products we have developed. So to do everything right from the beginning, we wanted to have every processes in place properly. So that's why EY came into picture and we have partnership with them. Then comes, to do all these things, there needs to be a software. There needs to be a proper integrated software, and that's where the French company Tinubu, which is a very sophisticated software, where in one platform we have the solutions for from the internal side and from the client side. If a client wants to interact with us, they can go through this software. We have opened the online portal so that they can interact with us. So it makes a much more easy access to us. And also we can understand better each and every requirement of the exporter. What are the risks covered by an ECI? It's a typical credit insurance. We can say that where the two fundamental risks are covered. One is the commercial risk, which we call it as delay in the payments. Delay in the payments when there is open credit given to a customer, and if they are not paying on time, there is a delay. If a default happens due to the cash flow reasons, that's where the commercial risk triggers, and that's what we cover under the commercial risk. Also, insolvency of the buyer. Here in this market, we don't have the insolvency law yet implemented. There is a law, but still not implemented. But in the mature markets, if there is any insolvency of the buyer, within 30 days, the claim is paid. It's very straightforward. That's the insolvency of the buyer. And then the cancellation of the contract, if there is a contract in place, if any, due to the commercial risk, any cancellation happens, and we cover that risk, it is we indemnify that. And then comes the political risk, which is the much more important risk, which, to be honest, a private insurer shies away to cover as a comprehensive. They prefer to cover more commercial, but as an ECI, as a federal entity, we do cover political risk as a comprehensive or as a standalone. Standalone when there is an investment policy. So in the political risk triggers, we have seen a lot of cases, a lot of countries where there is a huge opportunity, but there is always a trigger of political risk. So that's where this comes, and where there is a war or civil disturbance due to which the buyer is unable to pay. That is one risk covered under the political risk, or the currency transfer restrictions, which is we see quite often in our surrounding countries, currency restrictions. That's what is covered. Non-payment caused by expropriations, and the obligation, sovereign obligation, that is where the political risk triggers, and that can be covered under the policy. ECI, the solutions, when it comes to the two fundamental risks, what are the solutions? There are multiple full solutions we have created, and these are the main solutions. We are here, and we are in the process of developing more solutions to cater to the UAE entities. And some of the solutions, trade credit insurance, which is the short-term credit insurance, which is available in the market by the private insurers, very simple, 180 days payment terms. If a delay happens, it is covered. That's what is the short-term credit insurance. Export financing. Financing means as an ECI, as an insurance company, we don't provide any financing, but we facilitate the financing facility with the support of the bank. So there is always a bank when we are saying export financing, but we provide the insurance guarantee, and bank does their job of providing the financing. So bank also gets comfortable when there is an insurance policy behind them. And then the surety bonding, this is also, I'll show you in the roadmap when we are going to launch, but this is a big demand from the UAE market, the infrastructure projects, or there are projects going outside where there is a performance risk, there is a bid bonding. That's where we cover the surety bond. Then the investments, if a UAE company is investing outside, if a capital is going outside, and it is exposed to political risk, then that is covered under the investment protection. And the LC confirmation. This is one of the product which is very unique of ECI, LC confirmation. If there is any default by the issuing bank in the LC, if there is any risk cover associated with that is what is covered under the LC confirmation. This is a product suite which is developed by ECI, 16 products, and I'm not going to explain each and every product because we have a time constraint, but any of you, if you want a one-to-one meeting, we are available, and we can go through these products. The products are in a way designed to capture exporters, investors, and banks, the three segments of the market. We segmented into three. One is exporter, one is investor, and the banks. This is it's a slide related to the short-term credit insurance, how it works. There is a supplier, a UAE-based supplier, who is supplying goods to the buyer who is based outside UAE, and they are for 90 days up to 180 days, they are issuing the invoices, and these invoices are vetted by the ECI. Then if in the event, if a claim happens, if the buyer defaults, ECI can indemnify the claim. To do that, ECI will be vetting the buyer, they will be doing the assessment, credit limit assessment on that buyer, and they will be advising how much limit you can go on that buyer. That's how the short-term credit insurance works. And in this case, we can add one more to use this policy as a collateral to the bank, where if the receivables are insured, you can take to the bank, and bank can give you invoice discounting. If the payments are 90 days, you can improve your cash flow by getting the invoice discounted by the bank. And then the other thing, what we see is as I said, there are gaps in the market by the private insurer due to the capacity reasons. And that's where we came up with a unique solution of top-up cover. Let's say that a UAE-based entity has a short-term credit insurance with a private insurer, and they need a cover of 1 million from one particular customer based outside. But if the private insurer is only giving, due to the capacity issue or due to some reasons, only 500,000, then we can top up that limit with the equal amount or much more than that in a top-up solution. So here ECI is not here to compete with the private insurers. We want to make it clear even to our friends who are insurance advisors here. We are not here to compete with the private broker, and we don't want insurance advisors also to come to us as to make a comparative analysis of what ECI can do than the private insurer. We are not here to do the competition. We are here to compensate and complement the private insurer by adding more capacity to what they have. So we are here to complement. If they are exhausted with their capacity, if the UAE-based entity is not happy with the private insurer, you can bring it to us. That's not a problem. But if they have a primary insurance policy and there is a capacity issue, we can work on the top-up solution, which works perfectly. And it supports even the private insurers to retain their customers. There is a domestic credit to be included. The main idea of ECI was to support the exports. So you can ask why the domestic is there. Domestic, for sure, we have to support also domestic, because maybe the domestic transactions are related to something to export, to promote exports. So if a company is buying domestically the raw materials to manufacture something to export, he is carrying a domestic risk. To cater that, we are also open to cover the domestic. But having said that, it doesn't mean that the 100% of the portfolio is domestic and we will structure a solution. No, it has to be a proper balance, 50-50. What are the advantages of credit insurance, you may ask? There are different, and it's not an insurance product in itself. It comes with lot of side benefits, a lot of add-ons in the policy. One of the main thing is the balance sheet protection, which is the major, concern for any entity. If you're 80-20, we say that if the 20% of the portfolio is coming from large buyers, and if one default happens, it impacts the balance sheet badly. So that's where the balance sheet protection happens. That's where it helps in protecting the balance sheet, because if a claim comes, we are indemnifying 90% of the amount. So that means your balance sheet is protected and reserves can be set off. So that's where we say balance sheet protection. Improve your income, manage your bad debt reserve. If you have a risk mitigation, you have a policy, you can manage your reserves properly, improves your cash flow, improves your DSO. If your payment terms are 120 and you have a credit insurance policy, you can take to the bank, get the invoice discounting. This way it helps to improve your cash flows. And then the credit period. That also increases your sales. Let's say that if your salesperson comes and says that I have a new customer in XYZ country and you're not comfortable to give the open credit because you don't have the experience of that. In that case, ECI can support you, can assess the buyer and say that, okay, you can go up to this amount. Start progressively with small limits and increase, or if we have the experience, we can give the full limit on that. So that also improves your credit period, improves your DSO also, because when you have a credit insurance policy, it enhances your credit management. How? because there is a third party, it's a 4I principle. You do, when you look at your buyer, you look at the way how he's paying to you in a one side. But when it comes to insurance, we look from the multiple, how his payment performance in the market, how he's paying to other customers, how there are overdue. So that's how it is a third party opinion. So it enhances your credit management. Then there is a continuous, when the receivables are insured with us, it's our debt. So we continuously monitor that buyer. If there is any default in a political risk, if we see that if there is something going to happen, we will advise our policyholders. And then reduces your credit investigation. If a new customer comes to buy a DNB report, it might cost you $125. But if it is a credit limit from us, it's much cheaper and much more protected than going directly and buying an information report. And then collections. When it comes to collection, when you have your own, you have to have your legal team go the collection, it's a cumbersome. But when it is protected by an insurance policy, there are clauses in the policy which allows you to do the collection, which helps you to suppose the collection process, and easier to forecast your premium. If you know that how much you're saving in the reserves, or what are the bad debts protected, 90% of the loss if it happens, it helps you to budget it properly. And the premiums and the write-offs. In a nutshell, what is the benefits of credit insurance? To make it simple, risk mitigation, it is the biggest tool to mitigate your risk, to offload your risk by way of insurance policy. Increase your sales. As I said, if you want to expand to new markets, you can use this product. Facilitate financing. Use it as a collateral to get the facility from the bank. Reduce the bad debt avalanche and improves your cash flow. This is in a nutshell the benefit of a short-term credit insurance. Then comes, we have other line of business. We can say line of business 2 and line of business 3. Why we are saying line of business 2 and 3? Because we have a roadmap to introduce these products into the market. Post-shipment financing of exports, we facilitate that also. If there are any risk associated after the supply of the goods, and if there is a financing related to it by a bank, that is protected by a credit insurance as a collateral. And pre-shipment, if there is any pre-shipment, is a customized solutions. If a manufacturer, UAE-based manufacturer is preparing some goods in a customized way, and there are some risk associated, there is a cost to manufacture that goods, and during that period, if the buyer refuses to take, or if the buyer goes insolvent and he doesn't want, and these are customized products which they cannot sell it to any other buyer, in that case, this pre-shipment financing comes, pre-shipment cover associated with the financing. And only pre-shipment financing also exists when there is an UAE-based manufacturer wants to import and they want to have a pre-shipment risk. Then if a financing facility is required from the bank, then we can help in the pre-shipment financing. And then the bonds. Bonds are the one which we are planning to launch by end of this year, by beginning of next year. These are the surety bonds, bid performance bond, guarantees the repayment of advance payment. If there is any UAE entity giving an advance payment for any infrastructure projects or any investments outside, and that needs to be protected, that is where the advance payment bonds comes into picture. And then ECI focuses on guarantees and investors on the banks. These are the, the other product lines. Out of the 16, the one which I showed you, the product suite, these are some of the products. One important which we are receiving quite often is the loan repayment. A loan repayment product, if a UAE-based entity is taking a loan to build any infrastructure project outside and they want to, it is with the bank, then they come to this, asking for and the loan repayment generally triggers if there is any political risk. We can wrap it with the commercial risk also. It depends on each characteristic. And then letter of credit confirmation. This is another product which is in, I can say in demand, because it was lacking in the market by the private insurers. So we are receiving quite a volume of inquiries on letter of credit, and we are ready to offer this solution now. And then all our policies are designed to cater to small and large corporates. It's not confined only to the small SMEs. We have large corporates also who comes with large transactions. But the focus of ECI is to develop SME segment to make them much more comfortable and confident to do their business. So these are some of the products. Investment and equity insurance, as I said, this is the foreign investment insurance policies where a UAE-based entity is investing capital outside. They are building any infrastructure, hospitals or schools or airport expansion of the airports in any countries in African markets. We have received such cases. That's where we provide coverage. by an insurance guarantee, and then bank will be much more comfortable to fund that project. So how we build confidence to exporters based in UAE or the investors, this is the ecosystem, this is how we build the confidence by product offering different product solutions, customized solutions. We are not saying that these are the only products. When you come to us, we understand the risk, we understand the characteristics of the risk, and then accordingly we structure the policy. And then the risk expertise, as Mr. Vikram said, we have a risk director who comes from a very experienced background, and then we have also outsourced information from different chambers, from different channels, from the ministries of where we have the bilateral agreements. That's where our risk expertise also comes. Then we do a lot of industry research, sector segment, sector research, and that's where we educate our policyholders also that this sector is moving this way, and that's how this risk expertise comes. Then partnerships with the banks, that's how we build the confidence. And then the risk mitigation clause, the claim payment at the end of whatever solutions we have, if we don't pay the claim, then that's a challenge. So that's how the risk mitigation, and then information data. We have a data with where we can share. And this is a short-term credit insurance. I have 2-3 samples I will show you. As a short-term credit insurance, one of a manufacturer from Northern Emirates came to us that he is having a challenging. His salesperson brought 3 buyers from a matured market, but he doesn't have the confidence. So we structured a short-term credit insurance, allowing him to expand from 3 to 15 buyers, and now from 3 buyers, he extended the policy to much more buyers, and we are supporting them to expand that. So that's how the short-term credit insurance. Then comes the single buyer. This is one of a single buyer. When we say it is one-time transactions or 2-time transactions where one project happens. So one of the company, one of the manufacturer we are supporting who has a project in the expansion in one of the African markets, and they were not confident about the country risk. So that's where we provided the solution to cover the political risk on a single buyer cover. It is a very customized solution what we provided to this particular manufacturer. And then the foreign investment. There is a very, UAE strategically, they want to expand, support more on the renewable energy. This is one of the sector, even as per our mandate, we have to support. And one of the project we are supporting is one in renewable energy in a neighboring country. The facility they need is more than US $350 million, and the tenure is too long. Even we had challenges to get support from the reinsurance market, considering the long tenure and the country risk. Still, we have structured the solutions. And these are the sample solutions. I will stop here because Mr. Vikram also has to say something. And then, so any questions, we are available here. And one-to-one meeting anytime. The team, ECI team is here. They will share their contact details with all of you. So if you need any support from us, let us know. Thank you so much.
Within the UAE, do you cover those credit insurance as well, or it is not covered in this part of the scheme? Thank you.
Want to take that?
Team, I'll talk about more of the risk topics.
Yeah, if I understood that you're talking about the domestic coverage, yes. As a part of a portfolio base, yes, we have solutions for domestic.
Okay, so there's a...
Yeah, well, small clarification. Thanks, Lata. It's basically on a portfolio basis, as I said. So we might not be able to support domestic only portfolio, but if it's a part of export as a 50-50 or even more, we are flexible to that.
It depends on case-by-case basis. We are not saying that no, complete no, but it depends if it is the sector is strategic to UAE and it is strategic to ECI and it fits into ECI mandate and eligibility criteria, we are open to cover.
Ramesh.
Hi, thank you for that great presentation. I assume you're a for-profit entity. Are you?
We are, to be honest, a non-profit organization. Because
Non-profit?
Yes.
I see.
But at the same time, we are not here to give wrong advices on the risk or make a loss, because if we make a loss, you also make a loss.
Okay.
Because 10% is the retention. So we are basically a non-profit organization. Our KPIs are how much we are supporting the UAE-based entities in terms of expanding their sales, in terms of expanding the exports, in terms of investments, how we are supporting the GDP of the UAE. That is the main KPI of ECI. So
Regardless of ownership pattern of the entity.
there is certain eligibility criteria to fit into the ECI because we're being a mandate. So I'll give it to Abdullah. He will explain more from the distribution side.
Just for clarity, yes, it's all the UAE-based entities, free zones or mainland. If it's a UAE-based entity, despite of the ownership structure, the nationality, you are part of the eligibility criteria.
Perfect.
So it's all covered.
Perfect. Have you had any claims yet?
As I said, we just established in 2018. So on the claims part, I will give it to our expert risk, our Haitham. He will explain you. We will have the experience after 2 years when we come and present here. Maybe we can give you, like how we gave you the sample examples in terms of structuring solutions, maybe in terms of, but don't want to come to that situation of a claim. And I'll leave it to Haitham to explain
The
more.
answer precisely to your question is no, not yet. It's not because we're doing fantastic things in risk. It's just simply because we just started running, and as you know, usually it takes about 6 months or 1 year for businesses to get claims. Having said this, of course, we understand that credit insurance is the business of claims at the end of the day. People buy it because they want to be protected. So ideally, a lot of companies aim to have at least maybe 50% loss ratio. This is as for private businesses. But for us, the aim is to support businesses. Having said this, of course, is not by taking blindly risks or so on, but of course we're prepared for claims and we're here to support. But as Nata mentioned, at the end of the day, we are partners in risk, but we're also very prepared and aware that the situation and the risk environment around us is increasing, which means defaults are going to be likely on the rise. And this is why we're here, especially in this time, to support against these kind of defaults.
Thank you. And with due apologies to Vikram, I've overshot my quota.
It's okay, Ramesh. It's like a bank. You're always accused if a bank doesn't lose some money, which means either they are super at risk management or they're not lending enough. It's the same story here. So I had a question before this. If a trader here is doing an export, or he's selling to a third country and the goods don't touch the UAE, does that qualify as an export for the UAE-based entity? The material doesn't come in here, so he buys from Malaysia and sells to Africa, for instance.
Simply to say it's no, because if it is not touching the UAE, there is no add value to the GDP of the country. So ECI is here to support, as we said, which contributes to the GDP of UAE, so minimum 20%. So the goods, if it is going from third country, from manufacturers to directly, for us it's no.
Okay, so it's 20%, you said?
UAE content, 20% of UAE add value to the GDP should be there. Then we can support. So in this situation, what happens, it's like a DMCC, a typical DMCC company, for an example purpose, they have a branch office here, just an invoicing office. The goods comes directly from the manufacturer, goes to the buyer from one country to another, but it never touches the mainland, or it never comes to any of the port of UAE, then there is no add value to it. But if it is coming and there is no repackaging done, but something is added in the UAE GDP by employing the staffs or by service activities, logistic costs, some VAT factor is there, then we can support. But if the goods are not coming, then sorry to say, it's a no.
Okay, fair enough.
Just to add what Lata said, the whole idea of creation of Etihad Credit Insurance Company was to diversify the non-oil economy and to encourage and grow the made in UAE, And that's why we are sticking. So our primary focus is the goods fully manufactured in UAE. The second focus is that there's a lot re-export happening from UAE. In that re-export, 20% value addition, and that's the rationale behind it. Your question was more on the high sea goods, because those goods are not touching UAE border. So for us, if there is no contribution to the GDP of UAE, it will become difficult for us.
Okay.
Hello, my name is Dimesh. Can you guide us regarding the cost involved in terms of insurance?
Who wants to take that tricky one? Right.
Okay, it's a very good question, and to answer very precisely, it depends on various factors. The premium rates are always dependent on the risk associated with it. It's an exponential factor. The risk is more, higher the rate is. So it all depends on the sector, the risk associated, which countries we are covering in the policy. But in short term, you will not have a much. The average premium rate can be 0.35% on the thing, just as an average as a market rate, and it can be customized depending upon the exporter. So to say what is the rate, it depends on the risk.
Yeah, I have a question. In your products and services, you also mentioned about providing credit reports. Just wanted to know what is the process for doing that?
Well, I would say it's more of providing intelligence, let's say, to our clients. We probably at this stage will not provide the full report, but as you saw maybe on the slide that I presented, we work with different partners, with chambers of commerce, with providers for high and sophisticated information and rating models like Fitch and like others. This is what we promise our clients that we will provide to. So we will provide first the risk transfer, or we will take the risk from them, we will give the guarantee, and also we will provide them with high added value information on their clients, on the markets they're trading in, on the industry they're trading in order also to prepare them for any kind of situation. In the future, being a federal government, we will partner with the specific institutions who are providers, let's say, of information and high-level information, which will enable probably our customers also to access this kind of information through us. It's a good question. It's usually the usual suspects, I would say. But, you know, coming back to the gentleman question, we're not really for profit, and also to answer a little bit, as Lata mentioned on the price, we tend to be competitive because we're not here to make money, we're here to support you at the end of the day. But there are territories where it's, you know, sanctioned countries at the end of the day. UAE is also part of United Nations and international bodies, and wherever there is a sanctioned country, we cannot. But we likely to go to territories where private insurers are less, you know, or have less appetite to go to, for different reasons, being our mandate is to support. But if it's an off-cover, I would say, or a sanctioned country, no. If it's a high risk, yes, we will go with the specific conditions.
I have one question from a banker's perspective, which is, if there's an exporter, do you look at default insurance in favor of banks for an exporter? So let me flip. Is my question clear?
Yes, as I could understood, that your question is that do we have the products for banks where banks can offer the financing solutions, but banks will buy the policy?
Yeah, banks will insure themselves against default of
Exactly.
their borrower, who's an exporter.
Yes, we do have a product, but that's a very specific product. We have to look at each and every case, because sometimes that specific loan can be a term loan or can be a corporate loan. So we have to be very careful what is the purpose of that loan. For example, I'll give you another example. If a big exporter or a big manufacturer who is manufacturing here, he is importing a machinery, right? And he is coming to the bank for a loan repayment, right? Then that bank can come to us and we can support, because that will directly contribute towards increase of the exports of that client. Yes, but it is on a very specific case-to-case basis.
Okay, will this also apply to for stock and sell traders? Because as you know, a huge portion of our business here in Dubai is basically distribution, aggregation, and then disaggregation. So as long as the 20% value add that Lata mentioned is met, which is basically an interpretation of the P&L, I guess, in that case, will you also look at it?
Yes, of course, because you know it all boils down to the fact that if value addition criteria is met, we are more than happy to support.
Okay, fair enough.
Yeah, Ramadan Kareem. Congratulations, Ms. Lata, wonderful session. I have a layman's question. Just want to check whether export insurance is mandatory.
Sorry, please elaborate. The export insurance is?
insurance, is it mandatory? Like,
No, mandated by whom?
is it mandatory, like, one has to take for sure insurance before you push it out, or how does it work?
No, we are not like motor insurance, so it's not mandatory, but it's for your own safety and to encourage you for your own business expansion.
But Abdullah, let me put the question in another way. We would love to have it mandatory, right? And to be honest with you, in some part of the world, we are a federal ECA. That is a word used for government export credit agencies in the world. In some part of the world, it is mandatory for all exporters to buy the insurance coverage only from an ECA. And it is also mandatory in some European markets that banks cannot lend unless they don't buy insurance.
Just to clarify, you said which is the regulating authority for ECI?
Sorry, come again, Mike.
Who is the regulating authority for ECI?
Regulatory authority.
Yeah.
Atam, do you want to?
If you allow.
Please.
See, the modus operandi of establishing an ECA is different than any private insurance companies. ECAs normally are not regulated neither by a central bank or neither by the insurance authorities, because that has to give them a certain flexibility. And that is exactly the case in our case. We are not regulated by the insurance authority and we are not regulated by the central bank. And if you, and our board, chairman of the board is a minister of finance himself, and our deputy chairman is a minister of economy, which is a federal minister. So that gives us a certain flexibility and political leverage in terms of offering solutions to the clients.
I think we need to break now because it's 7. So our friends will, for the prayer time, we can always come back here if there are more questions, or they can be asked at the iftar later. So thank you all for now. We can always come back. But
Yeah,
we'd like to
definitely.
break
And I will
for
keep my
prayers now.
contact details if anybody wants to get in touch with me directly just for more queries. I'll be happy to answer to everyone.
So I'll just take a poll after to see if you want to come back in for questions, but now we just break for prayers. Yes. Thank you so much. Dishant, thank you for coming.